Hi there, Richard here on a Monday, and it is the 4th of April. Looking at the US dollar index, this is the critical point in which we've been waiting for some movement for some time, because it's going to be very much a signaler as to what's going to occur within the broader market. This is without question an ending diagonal. The question is when it ends. And we've come down in a number of patterns, you know, 1, 2 and down for 3, little up for 4. I think there's going to be another push down just to complete the pattern. What happens with ending diagonals is that they always retrace to the point of origin. So when we get that final push down, or indeed a breakout, even if that was to occur tonight in overnight trading, or indeed tomorrow, then any breakout would suggest that there's going to be a weakness in the euro. And at this point I normally go to the indices, but I think we'll go straight to the euro and have a look at that, because it's the direct opposite. If I can put the charts over like this and stretch it out, you can see what's occurring there. This line, this overhead line, red line here, is a major overhead resistance that's been in place since really going back to 2008, just like this line here has been major resistance going back to early 2008. So this is traditionally an overthrow. There's very few bulls out there for the US dollar. The talk is that it's going to tank forever, and indeed this has caused a mirror opposite by a rise in what's been occurring for the euro. So at this point, at this juncture, even though we might see a spike through or a spike down, we're likely to see the end of this particular pattern. And indeed, if that occurs, then the euro will retrace all the way back down to about 1.3, and the US dollar will power up very quickly to 80 thereabouts. This is likely then to be the start of a multi-month uptrend. So completely reversing. Now if that happens, and we can go to have a look at the Dow, and let's see if I can find that. The Dow, and what's occurring here is a classic end of pattern, end of trend pattern. We've come up here in 5, we've come down on an ABC. This has just been a straight shot since the end of the Japanese drama, and it has come up, as has the Australian dollar, and the Aussie market come up in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, now 13 straight days of trend. The view is that this is a B wave, meaning that we will begin a wave to the downside once this pattern breaks. Now B waves are able to come up and double top. They are allowed to be an extended flat and push above slightly, but indeed we would get very nervous in the event that this previous high at 12,370 was taken out on the Dow. But my goodness, it's close now. But it certainly looks a little bit ABC-ish, and that is exactly what these patterns should be, a correction, and then we're looking to the downside. So not sure what the trigger is. As far as the oscillator goes, it hasn't yet broken down on the daily. It's continuing up, so we wait and stand by for that to occur before I think we take any shorts to the downside to correct this really significant run up. Moving on to the Australian dollar, just to give you a quick look at that. It is working outside of this high. In the event that the long continues, and we've had, as I said, 12, 13, 14 days of up, then that overhead resistance would be up around the 1.5 cents, sorry, 1.05 and a half, or 1.6 would be a spike high to complete that pattern. And if we go quickly to a weekly, you can see that that stretches all the way back. You can drag that down to align with that, and then it kisses the top of this activity in late 2009. We had the down push up, but there's nothing to say that it can't continue to spike up, which would severely hurt a lot of people. I doubt whether, and I'm talking about exporters there, I doubt whether or not it's got any hope of actually realising that high off a trend line that I haven't drawn, but certainly that's the next resistance, and if not, I wouldn't be surprised to see it break down in the short term off this particular resistance at around about the sort of 1.04 mark. Having a look at the materials sector on the Australian market to get a gauge of what's occurring, is that we're seeing a similar pattern in terms of this V reversal coming off the Dow, but you can see that if we were to draw that line, which would be a similar shape as to what the Aussie dollar is portraying, of course the minerals, what happens to the Aussie dollar happens to minerals, but certainly wouldn't be surprised to see that push up to the sort of 14,700 mark. Looking at the financials, they are showing resistance off this long-term overhead resistance line. It was support for a long time, and then it pushed down, broke through, came above in an ABC correction, down again. It's almost like a triangle, but certainly we're seeing this little doji exhibit itself upon resistance, which should mean that it doesn't necessarily have to be the change in a primary trend, but certainly we're looking at some downside. Here's a long-standing target for 4,136. We need to see quite a bit of action between now and the next few days or the week to be able to determine which direction it'll go. But certainly, from a risk perspective, with a tight stop above this doji, if confirmation occurs tomorrow on the daily chart and we get a red candle, a down day, then that would be a fair play in terms of presenting risk and tracking to the downside, as would some of the banks. And just for the sake of the exercise, let's see if I can go to have a look at one of the banks. Commonwealth Bank would be a good one if I can find it. And can I get a default chart up? It might look a bit strange in comparison to the other charts I've got, but you can see that from an Elliott Wave perspective, we've had this high up around the $56, this Commonwealth daily. We've pushed down in a three-wave impulsive fashion, and we'd be looking for a fourth down to a fifth to demonstrate what's likely to happen in that correction. So looking at gold, which is always a good indicator, gold structure has stalled. We've got a little double top happening here. Certainly we felt that the 1467 target, which has been long standing, could be well on the cards, but in the short term, we're looking for weakness to see that break down. But of course there is a lot of enthusiasm out there for gold and silver to see it go long, and people are talking about going through the moon still. I'm not so convinced, and I certainly think that this could be effectively a wave 5 with an ABC, that's a correction down, ABC 3-wave correction, and here we've not yet finished the pattern. Could be a B wave, 1, 2 and down for the correction, but never done until it's done, so we need to find out. If it breaks below that sort of 1410 mark, I'd say that'd be a fairly good short. If it breaks above the 1446, that would be a fairly good long to take it through to at least 1467 or even possibly higher. Finally, let's just have a quick look at oil. Oil at the moment is really struggling on the way up. In fact, it's making us struggle because it's been so strong. I'm sorry, it seems that I have deleted the chart of oil and therefore can't show that just at this point. But the point is really all about the US dollar and what is happening there. Just to finish, in order to give a reasonable chart and a reasonable description, this is the XJO daily. Again, track the Aussie dollar, tracked up extremely hard. I mean, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days of up to come up and hit the underside of our long-term resistance. Now you remember that this really came back from the flash crash. This is the pride of the flash crash. This is the flash crash itself, and then it shot back up, formed a big what looked like an A wave, and then came speeding down again to test and set the bottom of a channel that has been tested 1, 2, more or less 3, 4 times, a bit of uncertainty, and then a severe breakdown, and then a severe retest. And that's the way these markets often work. The support acts as support. Once it's broken, it acts as resistance. So we'll see over the next few days. So that's why I've been sitting tight, is to wait for this pattern to emerge, and we'll just see whether it gives us some short opportunities over the next day or two. Well, that's it. Thanks.